Hello and welcome to the Getting a Loan segment of our home buying series. My name is Tracy Oliver and I'm a realtor with Coldwell Banker.
And I'm Scott Tucker, a senior loan officer with PHH Home Loans.
So Scott, the buyer has now found their home of choice and they're under contract. And in that contract, they've set up a series of deadlines for finance approval, appraisal, and of course settlement at the finish line. The first thing they're going to do is pick up the phone and call you, the lender. Why don't you walk us through what happens from there?
Terrific. Thanks, Tracy. You've actually already, in the very beginning, gone through the qualification process. So some of the things you may have already be ahead of the game on.
Okay.
But initially, now that you are under contract, you're going to do the formal application. Okay. The application itself, you're going to fill that out if it hasn't already been done so. The bank is going to ask you to update any financial documentation so that you can provide your bank statements, your pay stubs, tax returns, if you haven't already done those or provided those to the bank. We're also going to relook at your credit to make sure that everything is still in line as it was when you originally gotten qualified. We're going to go over loan programs and be able to lock you in on an interest rate. So maybe you're going to look at a 30-year fixed or an adjustable rate, depending on the program that you wish. We're going to look at the rates available at that time. Make sure you lock in on your interest rate so you're protected on that interest rate, and to make sure that the interest rate protects you through the length of your contract. Okay. Once all that is done, then we'll start ordering the things that need to be ordered. We'll order the appraisal on the property. Okay. We're going to order the title work on the property. We're going to start making sure that all the documentation is there and just kind of rerun through all the numbers to make sure that all the qualifying numbers still fall into place. Okay. Alrighty. Now that in itself is kind of the first basic step. When you go to the process, we submit the file or all that documentation to a processor. Okay. The processor is kind of a person that does all the background work that you never really see. You'll probably hear from them, but you'll never really see, and they do all the verifying of all the information you provided. So they make sure that they verify your employment, they verify tax return information, they do all those things, collect any additional documentations that may be required before it goes to the actual underwriter. Okay. And the underwriter is actually the person that makes that final decision for the bank in reference to your loan. They will review all the documentation. Once the appraisal comes in, they'll review the appraisal, make sure that the property is worth what you're paying for it, which is very important. Very important. They're going to evaluate your ability based on the terms of the bank that you can actually qualify for this mortgage, and they're comfortable with the fact that you have the ability to repay that loan. And then they will issue a decision. Based on the decision they provide, a lot of times they will come back and ask for additional documentation. Okay. But very simple things that can always be expected or should always be expected. So it's not a surprise. Don't take it personally. But they will come back and they may say, provide additional bank statement, or maybe we'd like an explanation of something on the credit report. Things like that. But they will issue, an approval on the loan, say we are issuing this approval based on certain documentation or certain conditions. Okay. And then it's up to us to provide those additional conditions back to them for final sign-off on the loan. Okay. During that process, essentially, once we receive the loan approval, that should be within the time frame that you have put in the contract. Okay. At that point, we would issue what's called a commitment letter. That says the bank is guaranteeing to give you the loan. Okay. And that's what we provide to you as the agent. We'll provide a copy to the buyer. And that information is passed along to the sellers, so the sellers know now that you can actually buy that property, and everybody has an ease and a, it's done kind of thing. So everybody knows everything is moving forward as it should. Okay, that's a lot that is happening.
Again, if you could remind us what the timeline is from when the buyer is under contract until settlement, what type of time does the lender need to accomplish all of those things?
Great, and that's very important, thank you. Normally, there's about a 30-day period required from application to closing. That may be different based on the contract that you've agreed to or negotiated, and we will certainly work with that time frame that you allot. From the initial time that we make the application, normally it's around a 14 to 21 day time frame to get everything completed to be able to get your commitment letter.
Okay.
That's appraisal and through underwriting.
Okay.
Okay?
That's helpful to know. It sounds like the buyer is going to be very busy working with you, the lender, and that's one of the things I always tell buyers. Once you're under contract, you need to be in touch and follow through with everything the lender needs so that we stay within our time frame and you provide what the lender needs in a timely manner. Then they can focus on packing and decorating their new house. But it's important to work with the lender during that period of time. The buyer's agent is usually managing the overall timeline, the contract, interacting with, of course, the lender and the other side of the transaction, but that buyer needs to be working with you hand in hand to see that the ball continues to move forward.
That's exactly right. And even if we think back to some of our previous conversations, we talked about keeping a file with pay stubs and bank statements and things in there that you are maintaining throughout that process. So that way you're prepared as the buyer as well. If the underwriter comes back and asks for anything, it's very easily accessible. And if you happen to be packing, you have all those things available and now aren't trying to go through boxes to try to find what you need.
Absolutely. That's good information. Thank you so much, Scott.
Thank you, Tracy.